I love the wild, wild west. It's an amazing opportunity. There's not a lot of rules. Buyer beware. It's every man for themselves. I like that. That's the free market.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome. Okay guys, Jay Martin here, CEO of Cambridge House, and we are searching for our next investment opportunity. I'm joined by Brent Johnson, founder of Santiago Capital. Brent, how are you?
I'm good. Happy New Year.
Happy New Year. Yeah, it's good to see you. We had you on the show last in the spring, I think. But the funny thing about these days is that you're on so many podcasts, I feel like we talk all the time.
Yeah. People have been liking to have me on to explain where I went wrong this year. So I'm sure we'll talk about that a little bit as well.
Okay, well, that's an interesting place to start. I mean, obviously, my audience is going to want an update on the dollar milkshake theory. And last year at our conference in Vancouver, obviously, you entered into this bet with Peter Schiff about the Dixie and all this stuff. And I want to mention that, on stage, you said, I'd rather take an 18-month perspective here, not a 12-month. So we can talk about that. But you stood up and did it anyway. So congrats for being bold. But give us an update, Brent, dollar milkshake theory. Where do you stand today?
Well, I think it's always important to take a step back and consider it in its big picture. I have always said, and people love to, send me emails or DMs or Twitter messages as, you got it wrong, you got it wrong, you got it wrong. And, the reality is, I said from the very beginning, I could be wrong. There's no guarantees when it comes to investing in capital markets. Now, I would say that, the first quarter of last year, I couldn't have been more right. And for the last 3 quarters of last year, I couldn't have been more wrong. I think, but now the question, so if people need me to say I was wrong, I'm happy to say that. I mean, all you have to do is look at your screen and to see that the dollar's at a 2 to 3 year low and know that, that it's wrong. So it's not hard for me to say that. The question becomes, where do we go from here? Right. And, I would make the argument that the game is not over, that this can very well still play out. None of the policies, procedures, programs that have been implemented after March, after the crisis we had in March, to fix the problem, actually fix the problem. All they've done is delayed it, pushed it down the road, deferred it, however you want to describe that. And so I still feel that the theory is still very valid. And, I think it's also important to remember that, I've never said that everybody should sell everything they own and just go buy a pile of dollars and sit there and wait. The real point of me pounding the table on the dollar is to kind of enlighten people to the fact that even though you don't want it to happen, even though you might not like it, it can happen. And the system is set up in a way that the dollar spike, until they completely redesign the monetary system, the setup for a dollar spike is always there. And I don't really have time to go through all the mechanics of why that is, but it just is. And, they can kind of come out of the blue. When we spoke in Vancouver last January, I think the dollar was around 96 or 97. Yeah. And it kind of went sideways for, call it another 6 weeks. And then from the March 1st until March 9th, it actually dropped from 97 to 94. And everybody said, here we go. The dollar's fallen out of bed. It's going to die. Right. And 10 days later, it was at 103 and the world was on its knees. Yeah. And the point, and that's really the point I want to make. I don't tell people to pay attention to the dollar because I want them to go sell their gold. I don't say pay attention to the dollars because I want them to go sell their stocks or whatever it is. I say pay attention to the dollar and that it's going a lot higher because I believe it is going higher. And when it does go higher, I think it's going to cause havoc around the world. And I don't think there's any way that has been taken off the table. Now, I know that there's people that disagree with me on that, but as far as the update goes, I'm still holding on to my thesis. It's definitely gone against me the last 9 months. Maybe it goes against me for another few weeks or a few months, but I'm still of the belief that we're going to see a higher dollar in the years ahead. Okay. So a couple things there I want to unpack. First of all, yeah, you get your Twitter strategy is actually very entertaining, and everybody should follow you on Twitter, Santiago AU Fund, because
someone in your position, you're making calls, you're making them publicly, you're sticking your neck out, you're opening yourself up to criticism. And there's usually three ways to deal with Twitter trolls. You ignore them, you block them, or you argue with them. I find that you almost bait them, Brent. It's like you're putting things out there just to get into it. And it's actually really entertaining and educational to follow you on Twitter. So I appreciate your content there.
Yeah.
Secondly, the whole you're wrong is a very binary when people may not understand what it is you do. I mean, most people that watch this content, Brent, they're like me. They're retail investors. They're looking for upside. They're trying to create wealth, right? What you do is different, and I don't have the problems that you have because you manage the portfolios of some very high net worth individuals who have a completely different problem. Once you've created substantial wealth, your focus shifts, not from, from building more wealth always, but more importantly, how do I keep the wealth I have? Right? And that's a very different game. And it's almost a game that if you win, you're rewarded by facing the same problem next decade, right? And again and again and again. And how much does that impact your outlook and your overall investment strategy?
Oh, it absolutely impacts it. Like you made the point very well. For better or worse, my job in what I do is representing people who have significant wealth. And my number one job is to protect it. Everybody wants to make money. But I'm not trying to make these individuals rich. They did that on their own.
Right.
What I'm trying to do is help them devise a plan that allows them to make money through some very difficult environments, but also keep them from getting poor in the process. The greatest way to create a fortune is to have a concentrated bet and have it pay off. The greatest way to take a fortune back to zero is to maintain that concentration and never try to hedge out any of the downside. And so I feel like my primary job is to protect. My secondary job is to grow, and the third part of my job is to provide some peace of mind during that time period. And sometimes I'm successful and sometimes I fail. I mean, I get things wrong all the time. But I think I've been doing this for over 20 years now, and I wouldn't have been doing it for 20 years if I didn't get it right more often than I got it wrong. And I think it's become a little bit easier to say you're wrong in the last couple of years. At least that's my perception. When I first started in the business, I never heard anybody admit they were wrong. And I still don't hear it that much, but I hear it more often now than I used to. But it's very powerful. Saying you're wrong is very powerful because then it puts everything in your past and you got the clear skies going forward. But it's hard to do, but it's important to do.
Yeah, I like that perspective.
Yeah.
Okay, now I want to address something that I see in a lot of conversation around the dollar, and you tell me if I'm on the mark or not. And it seems to be a bit of confusion. And when I say that, I see a lot of conversation on Twitter and in YouTube comments, people that are bearish central banks or want to see central banks fail are simultaneously bearish US dollars because they see that relationship. But that's not necessarily the case, right? A strong dollar is actually far worse for central banks. So therefore, if you're willing central banks to fail, you want to be bullish US dollar. Now, can you explain that? Am I on the mark there? Am I missing something?
Yeah. Well, I mean, again, this is my opinion, and I'm sure there's people out there that disagree with me. But the point I would like to make to people is I think a lot of people get cause and effect messed up. A lot of people say the central banks are printing, and that's the cause, and the effect is going to be that the dollar is going to fall. Well, it's actually the opposite. What actually has been happening is that the dollar's been rising, or there's been global deflationary pressures. And whenever these global deflationary pressures get too high, the dollar rises, the central bank, the Fed, comes in to print to alleviate the pressure of it going higher, right? And I think that's the point I want to make, is that if the Fed is able to print, money printer go burr, and coordinate with Janet Yellen, who's coming in at Treasury, and they're able to take the dollar from 89, the dollar index from 89 to 80 or 75 or whatever it is over the next couple of years. And as a result, we actually do get some of these sustained inflationary pressures. And the U.S. kind of chugs along, and it starts to get some inflation, and the emerging markets rise, and global GDP starts to pick up. Well, that's the central banks winning. That's the perpetuation of the system. That's exactly what they want to happen. So, if you believe that central bankers are going to be successful, then that's your view of central bankers being successful. So the Fed failing is the dollar moving away to the upside and them not being able to control it. because the dollar moving higher aggressively, it's a wrecking ball. And I know there's people have heard that term before, and they don't believe. I mean, I'm telling you, the dollar moving higher is a wrecking ball. I mean, last year the dollar only went to 102, 103 intraday. And it only lasted a day or two, and the whole world was on its knees. And if you don't think that's the case, just rewind 9 months. I mean, everything went down in that environment. Everything, bonds went down, stocks went down, commodities went down, gold went down, Bitcoin went down. Everything went down in that environment. And it's because the collateral that underlies the entire system went up, and that's the US dollar. Now, you don't have to like it, but it's kind of important to understand that.
Yeah, because it essentially creates a cash call on US dollar denominated debt.
Exactly.
Right? Far more expensive than the price you paid for that debt.
Yeah.
Okay, now let's pivot a little bit. Thinking forward, 2020s, the conversation I'm hearing a lot right now is whether or not we're going to experience serious inflation.
Yeah.
Do you have any thoughts on that, Brent?
Yeah, that's kind of been the big debate in my world for the last, the last year, and especially for the last 9 months since the Fed and the other central banks have come out with these massive, the polys of fiscal spending and, QE and da, 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 da. And the first thing I'm going to say, and I've fallen on the deflationary side, and I will stay on the deflationary side. And the reason is because I don't think that they have printed anywhere near enough to deal with the massive amount of debts that are out there. Now, will they print enough? At some point that they probably will. I just don't think we're there yet. And so we've had this big argument is, are we in an inflationary environment or a deflationary environment? And I think it's important to kind of take a step back and look at it at a bigger picture, because we've had this quote unquote argument or debate for 12 years now. The most obvious trade coming out of the 2008, 2009 global financial crisis was inflation's here. The central banks are going to print. The dollar is going to fall, and commodities are going higher. Emerging markets are going higher. Get out of fiat currency and get into real assets, right? And it didn't happen. Now, you had periods of time where it happened. It happened for 6 months. It happened for 12 months. It happened for 18 months. But it always rolled over. And so when people say, Brent, how can you not see inflationary pressures? Lumber's gone through the roof. Copper's gone through the roof. Oil's up. Wage pressure starting to happen. Yeah, I see this. I'm not going to deny that we've had inflationary pressures for the last 9 months. My point is unless they continue to do it and do it in an even bigger amount, and we get some actual wage pressure that is consistent and lasts, it's going to roll over again. Because the only way you're going to get lasting, sustainable inflation is if the banks loan the money to Main Street. If money gets into the hands of Main Street and they use it to spend and the velocity of money picks up, then you will get sustained inflation. But right now, the monetary velocity is the lowest it's ever been. People point to the growth in lending over the last year, and they say, well, see, Brent, here, lending is picking up. It's going to go through the roof. Well, if you go back and look and see exactly where those loans came from and when they came, they happened in April and May, which is when they had government-backed loans. Mm-hmm. And since then, lending has decreased every month, for 9 months in a row. And lending standards are tighter. So there's this big thesis out there that the world's just a flood of liquidity, but it's not. It's hard to get a loan right now. Lending standards are higher right now than they were coming out of the global financial crisis. Mm-hmm. So this idea that there's just all this money sloshing around out there and that credit's very easy to get, it's just factually incorrect. That doesn't mean it's impossible, but the idea that, watch out because we've got this massive inflation, it might come. I'm not saying it won't. I'm just saying it's not here yet. Mm. And unless they get the money to Main Street, which is, I think, part of the whole digital currency thing, I don't think we're going to see sustained inflation. And so I'm willing to stay in the deflationary camp until I see that happen. Got it.
Okay, and I want to touch on cryptocurrencies with you, but first, let's focus on the wealth creation side of your business. Where do you see value right now, Brent? What are you looking at for the next, call it near term, like 1 to 5 years?
Well, I mean, this kind of gets back to my whole milkshake theory, right? I still believe that the US dollar and US dollar assets are the place to be in the short term. next 2 to 3 years. I'm not on board with this emerging markets, theme. That's the most consistent and popular trade right now is to get out of the dollar. The dollar's going lower, allocate to emerging markets and inflationary assets. That is hands down the consensus. Anybody that argues that that isn't the consensus just isn't paying attention. And maybe the consensus will be right. I don't think it's right, but that is the consensus trade. I mean, and the thing is, when people say, well, it's not consensus, and because they feel like that's a bad, no, anybody who's making, any contrarian ultimately wants to end up in the consensus. That's how you make money, right? Mm-hmm. So I'm not saying that being in the consensus is a bad thing. If you got in ahead of everybody else and now the consensus is with you, that's a fantastic thing. I'm just pointing out that don't think that you're allocating to gold and commodities and emerging markets because you're some kind of a contrarian. You're not. You're fully right in with the consensus. And I just don't think that that's correct yet. I still think we're going to see more deflationary pressures. I still think that the dollar is going to go higher. I think that's going to put pressure on emerging markets. I don't think that the central banks have everything under control, despite the theory otherwise that money printer go burr and all the problems are solved.
Right. Okay. No, I really appreciate that. And, everybody wants to be a contrarian investor, and this is what it looks like. It's saying yes when everybody's saying no. Right.
Yeah. Right. But I would say I talk to so many people who love the idea of being a contrarian investor as long as they have a bunch of people around them doing the same thing.
Of course. Yeah. No kidding. Yeah. That's great that you went there because I wanted to ask your opinion on the emerging markets trade, right? And people point to things like healthier balance sheets and healthier government balance sheets, et cetera. But you're not watching that right now, you think? Okay. It's
possible there's a few countries out there who, will navigate this better than the others. But as a general trade, the people that are just allocating to the emerging market ETF and think that that's, just an automatic home run trade. I'm not there.
Okay. Got it. Now you touched on cryptocurrencies. And I want to get your thoughts because I've heard you say things like, I really want Bitcoin to work, but, and then you'll get into why you see some issues there.
Yeah. So I've talked about this before. And, I think one of the biggest mistakes that I used to make was that I would invest in what I wanted to happen. Right. And it took me a long time to realize that it's okay to do that. But just because you want something to happen and you like it doesn't mean it's a good investment or that it's actually going to happen. Right. And so if your goal is to change the world and put all your effort into changing the world, then I love things like Bitcoin. I love things like gold. I love things like, independent thought and the libertarian movement. Now, do I actually think all that's going to come to play out in the real world? Not necessarily. So I think you got to separate the two, and you got to be really honest with yourself of what it is. So bringing that back to Bitcoin, I love the idea of Bitcoin. I read the white paper on Bitcoin in January of 2010. I think the price was trading around 25 or 30 cents. And I remember sitting back in my chair and thinking, if the technology works the way this paper says this technology works, in a million years, it will never be legal because it's so powerful, it'll change the whole world.
Right.
But I loved it. And of course I didn't buy it then. I obviously should have. I ended up buying it later when it was, between, I think, 700 and 1,000. And so I own some Bitcoin. I've sold some of it last year, and I sold a little bit more of it a month ago, around $27,000. It's higher now. It's about 30,000 or 32,000 today. And so I love the idea of private market competing currencies where the market chooses what they want, right? But I'm not naive enough to think that if it ever seriously challenged the powers that be, that they're just going to sit back and let it happen. And then, so people will say to me, well, then if the U.S. outlaws it, well, then Europe will pick it up or Africa will pick it up. Yeah, of course. There's always been black market currencies. This is not, black market currencies are currencies that go against the fiat tender laws. That's not a new concept, right? So Bitcoin could go to $1 million and never displace the US dollar or the euro or the yen. I think it's a fascinating technology. I think it has incredible potential, but I also think it has incredible risks associated with it. And I think the people who focus solely on the opportunities and don't take the risks seriously are doing themselves a disfavor. And I think there are some bad actors in the space. People will say, well, they can't shut it down. They'd have to turn off the whole internet in order to get rid of Bitcoin. Okay, that's fair. So, and that's one of the reasons why I like Bitcoin and I own some of it. But if you don't think that they can take some steps to dramatically curtail its behavior, you're crazy. And then I do think there are some bad actors in the space. There's bad actors in all space. So this isn't something that's unique to crypto. But I kind of equate Bitcoin, or not Bitcoin, just crypto world to the wild, wild west. And listen, I love the wild, wild west. It's an amazing opportunity. There's not a lot of rules. It's buyer beware. It's every man for themselves. I like that. That's the free market. But the wild, wild west was a dangerous place. You could make a lot of money and you could walk outside and walk down the street to your horse and you get shot in the back. Right. So, you just got to know the environment you're operating in and accept the risks that come with it. Okay.
No, I appreciate that. No, I want to get your thoughts on the commodity sector. Actually, the first time I met you was, I think it was 2018 at a conference we were running in San Francisco, and you were up on stage saying, I'm not buying any miners right now. Right.
Yeah.
And it turned my head because it was a mining investment conference, and our investors were there to get perspective on the sector. And that was, just in that environment, I don't think given the market at the time, but in that environment, it was a contrarian statement.
Yeah.
And so where do you land today, Brent? Are you looking at the commodity sector? And if so, what's catching your attention?
Well, what's catching my attention, the short answer is yes, I look at it all the time. When I look at the commodity side, this is a general statement. There's always exceptions to every rule, but as a general statement, I think commodities have gotten way ahead of themselves. I think the whole world is in on this one trade. The dollar's going down, commodities are going higher, inflation's here to stay. It's not just and if you look across a number of different markets, the commodity markets, relative strength is as high as it's ever been, or as high as it's been recently. The sentiment readings on them are as high as they've been recently. Look at something like copper. The speculative position in copper has never been greater. Right now, I don't claim to be the world's great expert on copper, but what I do know is that the producers who produce copper and the banks that finance them have never been more short copper, and they know a lot more about it than I do, which tells me they're very happy to be selling copper at these prices. Mm-hmm. Now, again, it doesn't mean that copper won't go higher. I'm just saying I think it's very stretched. And if this whole global reflation trade doesn't pan out the way everybody thinks it's going to, then copper's, I think, going to go lower. Same thing with oil. You look at oil, price of oil is around $50, maybe a little over 50. The speculators in oil are really high. But the producers who pull oil out of the ground and the banks who finance them have like their second or third biggest short position ever, like 500,000 or 600,000 contracts. Now, that tells me that they're very happy to be selling oil at these prices. Now, does that mean oil can go higher? No, of course it can go higher. It can go higher, but I'm just saying, to me, everything is priced to perfection. And if this, I always tell people, never underestimate the power of a good narrative. And right now, the narrative is, global reflation's here. The central banks have everything under control. The dollar's going lower, so get into real assets because inflation's coming. Mm-hmm. And again, it might be, but everything is positioned that way as well. Now, so far, I've kind of talked about the same thing exists in lumber and some of these other, industrial commodities. Now, the one area where I would probably temper my bearishness, if that's the right way to say it a little bit, is in the agricultural commodities. I'm not sure we're going to see a huge pullback in the grains and some of the softer commodities. I think we have a situation where no matter what happens economically, people still need to eat, right? So, if we have a recession, demand for copper will fall. But if we have a recession, demand for corn probably won't, because people still have to eat, right? Or wheat or beef or whatever it is.
Yeah.
And I think we've gotten to a place with some temperature stuff around the world. I'm not somebody who thinks that global warming is going to last forever. In fact, wouldn't surprise me if we have some colder weather over the next 5 to 10 years, and therefore crop yield is not as high. But everybody still needs to eat. It wouldn't surprise me if we have military conflict. with the way things are trending. That typically makes the commodities more expensive, especially food.
Yeah.
So I kind of feel like that if I'm going to allocate to commodities, that's going to be the space that I would look at more than the industrial commodities.
Interesting.
And I think if commodities in general go higher, I don't think it's going to because it will not, in my opinion, it will not be because we have this accelerating global demand. It will be due to supply constraints more so than demand picking up. Okay. And I think that's a big part of what we've seen so far is, demand has been a little bit higher over the last 9 months than a lot of people thought it was going to be in March. But then you've also had this very big, supply constraint due to either trade or, mine closures or whatever it is. And, so when you get restricted supply and demand stays equal, price rises.
Yeah. Okay. I'm with you. Now, it's interesting, your comments about agriculture. I've been looking at different angles to play the food industry. Right. Yeah. And I like to get kind of into the weeds and into the early stage stuff. And where I've been spending most of my time is looking at vertical farming, specifically the vertical farming equipment manufacturers, because there's interesting business models there. It's kind of like a picks and shovels approach to vertical farming, because you're not betting on the actual production of one farm. But what do you look at if you're looking to play in the ag sector? Are you looking at ETFs, or how do you? Yeah,
I think the company Bunge, Mosaic, some of the fertilizer companies, or some of the bigger corporate players in that space. Right now I unless I have a really good beat on an individual company, I typically do an index or something like that if I just want to get and especially when I'm not yet sure of a theme, oftentimes I'll initially just go into an ETF just to get exposure to that sector. Yeah. And then if I want to stay there, then I'll branch off and go into some individual companies.
Got it. Okay, Brent, look, it's been awesome catching up with you. And thanks for coming back on the show, giving us an update. And
anytime.
Yeah, all right.
Happy to do it.